Last time on Trading Bull Z, SPY gapped down at the end of the trading day, and our hero swung some plays. Would SPY recover, and how did our heroes fare in the battle with the market gods? Find out on this exciting episode of Trading Bull Z. What is going on, Z Traders? Zeno Trader here, and today we're coming at you with your daily market recap. If you find any value in what we do, consider subscribing for more content and market updates. And if you wouldn't mind destroying the like button for the YouTube algorithm, follow us on Instagram and join us live every day, Monday through Friday, during market hours on our Discord server, where we have over $5,000 worth of learning materials, all for the wonderful price of, drum roll please, free 99. That's right, absolutely free to join. The link is posted as always in the description below. Be there or be square. And lastly, remember, this is not investment advice. This is for educational purposes only. Do not hop into anything discussed here without your own due diligence, as these are not trading signals, but rather my thoughts on specific securities. So, ladies and gentlemen, with that being said, let us get into it. And we are looking at a 3-month chart, daily chart of SPY. All right. And we talked about a little bit of what was going to happen yesterday, and we called it spot on. I told you guys yesterday that there was a good chance that SPY would gap up today, and it did. Okay, so this is where we closed above the highest yet close above the 200 MA on the daily chart. That is without a doubt an extremely important close, because it does pave the way and suggest we may actually break out from this region. If that is true, then we may be closer to a V-shaped recovery and further away from a retest of the lows. Now, we're not going to count that out totally. We have a lot of economic data to yet to come before a determination like that could be made. And of course, we have to be able to watch political events. Anything could come out of anywhere to disrupt this. I mean, there could be we still have the trade stuff going on in the background. We still have oil prices to grapple with. And we have just a ton of data that could come out that could disrupt this rally. And remember that this rally is not based on anything necessarily fundamental. This is all just hopes and dreams and pixie dust, sprinkled with a little bit of unicorn tears here, hoping and wishing. So if we get negative data, that's not going to be great. Now, of course, investors are going to get more cautious as we get up higher above these levels, and as they should, right? Because I mean, like I said, there's nothing really concrete that's driving this rally other than enthusiasm. Also, if we look at the chart, the volume on this candle does not look very convincing to me at all relative to previous days' volume. That does suggest to me that this may be short-lived. Also, it has been crossing back and forth, red and green on the MACD. It's yet to do anything specific or definitive. We are reaching a over purchased zone on the RSI for the daily chart. So those things do not bode well for a long-term continuation of price to the upside. let us take a look at the 5-day chart to see what we got going on. We have some gap ups here where looks like we're trading at the top of this range here. We gapped up, but we have yet to fill this gap down. We talked about this a little bit yesterday. At some point, she's going to have to fill this gap. Now, I told you I thought it was very unlikely that we fill this gap this week. Maybe next week, who knows? We have to see what data comes out that can affect these prices. So let's take a look at SPY on our Active Trader Pro. We can see that SPY, one second. Okay, so again, SPY is trading a little above this range. Nothing too significant yet. We have great resistances yet to come. It looks about $300. We have some resistance going on. So we'll see long term, unless there is some sort of super positive catalyst. I don't believe that will continue on at this level. Today, volume was pretty, it's decent. We've had higher volume on previous days, but we'll see how this all turns out. So lastly, we'll look at it on TradeView. So, yesterday we had the gap down. Told you guys in the video market recap yesterday that we might recover today. There's more than likely, and we did, and we traded sideways up here. So we're trending a little bit above this line. One of two things is going to happen. Either we're going to find a way to break out, but even if we do, we're going to hit this and come back off of it, which would be a great place to buy puts. If we do in fact get up here, or negative economic data could come out and we could fall below this line again. That price level looks to be about 295 ish, somewhere in that ballpark. So if we close, I would say 2 consecutive hourly candles beneath this line, chances are we may stay there or continue, or we could do like we did yesterday, 2 hourly candles below and then bounce. So we'll just have to see. It's holding up at this price level, which I'm surprised it hasn't made a move to the up or downside. It's just been trending right on this line. The Bulls and Bears are going at it, man. I mean, the Bulls don't want it to fall, and the Bears want it to fall. So we'll see who wins, but this is a long time to be trading on this line. Typically, something would have happened already, but we don't have any catalysts either way. The Bears don't have any catalysts, and the Bulls don't have any catalysts, so we're stuck trading at this level. So be careful with your trades. Don't go in too heavy either way. If you do plan on trading SPY, as I said, this would be a good place to get in puts lightly, because typically we reject off these mid levels initially, but if it wants R2, it's going to get R2. So if you want to play this, you could. The other thing you could do is if we break down and get to around, what is this, 287, you could look for calls around there lightly, because we may bounce initially, but then if the selling pressure is great, we could end up falling down to this support level here, which looks to be around 284. So for me, in a nutshell, I think that SPY tomorrow we'll probably once again trade sideways. It'll do something in the morning and then reverse direction in the afternoon. So, in other words, if we pump in the morning, we'll dump in the afternoon. If we dump in the morning, we'll pump in the afternoon. So, let's take a look at the economic data that we have coming out uh, today. Really, they like I told you guys yesterday, we had a lot of oil stuff that came out. So the crude oil inventories, I want to talk about that for a second because that's really interesting to me because, you know, negative 4.9 million barrels rather than 1.1 estimated. So, and it was reported in an article that these barrels kind of just came off last week, which is really odd. So, what happened to these barrels, and did they? How? Like, I don't understand how we have negative inventory, like in a market like this. That just seems very suspect to me. I don't know. This was very curious. I have to do some more research on this, but that's I don't know about this number, man. I'm gonna be honest with you. So yeah, crude inventory. I mean, it's just I don't know, but it is what it is. The markets loved it. They went, the Dow was up 300 points today, so it is what it is. FOMC minutes came out today. Nothing we didn't already know. Keep steady course, print more money, yada yada yada. Right. So let's take a look at what's going on tomorrow. The economic data. So we got the jobless claims. It is Thursday. Uh-oh. Let's see what we got. So we got the previous and we got the forecast. So we got 24,000 forecasts. We got, um, we'll see. 4-week average. Yeah. So unemployment tomorrow. So again, this whipsaw back and forth. But again, this will come in the way that they do the estimates. It's purposeful to kind of cushion, you know. Oh well, it wasn't as bad as we projected. See, look at that improvement. I don't buy it, but we'll see. Manufacturing PMI, that's important. Existing home sales, service PMI, yeah. So again, natural gas service, and nobody cares about that. Federal tax, yeah, okay. We got some. Oh, Chairman Powell, that's yeah. Please circle that. FOMC member speaks. Yeah. So tomorrow's going to be a big day. We'll see what happens. Like I told you guys, don't if you can at all possible, try not to trade during major market events because that can affect how your trade goes. I had an experience like that today, actually. So just be careful with a lot of the release of this information. So, you don't want to get caught in the middle of a trade when there's some negative information comes across the wire and then stocks just go against your position, right? So, in a nutshell, I think SPY is going to gap down tomorrow. Not uh, barely though. It's not going to fall. Like it'll give back some of its gains. We've been up, down, up, down. That seems to be the pattern. But if we, like I told you, if in the morning we're down, we'll recover in the afternoon. If in the morning we're up, we'll dump in the afternoon. And of course, we have to account for these economic releases of data. So that's stuff we want to watch out for. So, and pretty much when jobless claims come out at 8:30, we'll know what's going to happen. If it's positive, if the market cares about it or receives it, then that'll pretty much tell us where we're going to open. You should be able to look at futures and see where we'll be at. All right, so that concludes this segment, our market outlook for today and tomorrow. So without further ado, it's the moment you guys have all been waiting for. Let us get into the plays. So, our first play, we talked about this yesterday, although we did not get in. The spreads are terrible. I have been long a proponent of staying away from awesome trades with bad spreads. Yes, you can make a gazillion dollars because you can predict, where the trade is going to go in the direction. But the problem is, because you remember yesterday we had these lines uh, uh, on our chart yesterday. So I told you it had a W bottom, all that. It was primed to break out, but the spreads were nasty, so we passed this up. Specifically because you know, even if you show a big gain and you have to sell at the bid, it's not going to do you any good because you're giving back most of your profits in order just to get out of the trade. But assuming we did get in this yesterday at market close, you could have made a lot of money. They were up over $8 today. They beat on earnings. They had earnings coming up. And of course, they beat. So that gives us also some insight as to whether NVIDIA is going to beat. I think they'll kill it. But the question is the forward guidance. So we'll see where they go. Let's take a look at it on the other chart. Oh boy, so we're up against a resistance level. That's interesting. So has it run its course? Will it be able to break up over R2? And even if it does, it's still going to come up to another resistance here at about 115.86. And then it's still got to come up and break another resistance again at 117, and then another at 118. Personally, I think that's highly unlikely that they get through all this resistance, but you never know, right? We'll see what happens. We got the double touch here. If they don't break this, it's going to take a dump. So look for, I would say, calls lightly. I'm just going to be super conservative and just go to this R2 level. Look for calls over 117. Look for puts below 112. Convincingly, of course, with hourly candles and 5-minute candles, of course. Next, we have BABA. So let's take a look at BABA. We got into that yesterday, and we swung it today, and it did good for us. But it kind of went down at the close of the market. So you can see on the 3-month daily chart, we got the double bottom, right? That's nice. We also have a pin bar close, a green pin bar close, and that's actually a good thing because that means that prices that fall bounced. So we have some support at this level. So, and the reason why BABA fell during the market today, if you look at the daily chart, it kind of like fell off the cliff here, but it recovered because lawmakers are considering legislation that will ban certain Chinese companies from trading on U.S. exchanges. That's unfortunate because we were going to kill it with this play. We were up big, and I actually bitched out because I saw this falling before they actually fell off, and I got out. But of course, go figure, they find a bottom and trend back up. So tomorrow we'll be looking for a re-entry, if possible. They report, I believe, on Thursday. So let me see something here. Baba. All right. So they're trading on R2. Technically, this was bad news, so they should be able to get up above R2. They'll hit this area up here. I probably would look to buy calls above this area here, or even if I wanted to be super conservative, R3, around what, 224 that is. So yeah. And then if they do end up trading down or whatever the case may be, look for puts around under 209. Yep. So the next play is Take Two Interactive. This has been a darling of mine ever since last week. I've been telling people about it, and it's been doing well, and it continued to do well today. I think the peak was around $6, but they had earnings after market, and they totally fell off the cliff because they did revise their guidance downward. So I told you guys they're not just taking into considerations beats, because they did beat, but their forward guidance did revise downward, and that's not good. But I look at this as an overreaction. Not necessarily, and this pin bar is very ugly for calls. I mean, that's super ugly. But we'll see. We'll see how this plays out. Maybe they bounce. But the thing is, we were holding this, and we actually still swung it today. But we didn't swing our whole position. We sold out of this gradually during the day because we knew that this may be a possibility. So if we were greedy, we would have just swung our whole position, but we didn't. We gradually sold out of it. We're only holding about 5 contracts. So even if it goes to 0, we have money in the bank. And that's how you're supposed to trade. Next thing is Intuit. We didn't take this trade, but we did talk about it a little bit. They do have earnings coming out tomorrow after the close. They've been helping to facilitate the stimulus payments. They may see a boost from that as you need to file your taxes if you've earned income to qualify, and TurboTax has big market share with that. So we'll see how it goes. I like this last candle here, and I like this pin bar that suggests a continuation. They may possibly break over VWAP tomorrow in the run up to earnings, and they're not even overbought yet. So that's actually a really good sign there. I like to see that. On the 3-month chart, I don't know about this candle. It's not really going anywhere. It's very indecisive. We got dojis. I don't know. And we got this def cross right here. That wasn't cool. And it didn't drop that much for a def cross. Usually def crosses be like, whew, like this. I would have thought this was a def cross, but nope. We got the def cross right here. But which maybe we get a golden cross. I don't know. It's starting to curve back up, looks like. So if we get a golden cross, that's great too. Mach D doesn't tell us anything. It's a little bit overbought on the daily 3-month chart, but I don't know. We'll see. Intuit. Okay, so they're up against a resistance level that they are trying to break. I would have felt a little bit better about this breakout if they would have, closed the day like down. So just because like every time we see something close down, they go up the next day, like down, up, down, and they go up. You see how that pattern is? So I don't like that they just traded sideways kind of up, because that makes me inclined to believe that they may fall tomorrow. I don't know. We'll see how they do on their earnings and what their forward guidance is. If you want to get in calls lightly over 295, if you want to get in puts, get started position likely under 282. Yeah. And last but not least, we got NVIDIA going on. Let's take a look at that. This has been killing it all week long. I'm late to the party. I likely won't get in to a position at this because their options are ridiculous now. You're not, remember, the whole goal is to buy low and sell high, not buy high and sell low. All right. It's already done what it's going to do. They'll probably kill it on earnings and maybe go a little bit further, but they are overbought. They do need to come down. These candles, very convincing bullish candles, green on the MACD, everything that you want to see. They are, except for that these daily candles have been got a little bit of resistance. It tries to go up, but then can't stay up there. Tries to go up, can't stay up there. Finally gets up, but it seems to be stuck trading a little bit below VWAP. We'll see if it can break out tomorrow. This candle with this little wick here, that's a little bit bullish. We'll see. 1-day chart, sideways. Whoa, like that candle right there. We'll see though. NVIDIA. Yeah, so same thing, but they're actually in the middle of the channel. I don't love that. I told you guys in previous videos I stopped channel trading. I'm not going to do it anymore. Every time I do that, your win rates are less, way lower when you trade in between the channels, right? So we'll see what happens with this. But that's it for the plays. Let's get into our P&L today. So we got our plays for today that we took, and we have Baba up first. We did really good with Baba. I swung that from yesterday, so it was pretty good for me. BJs, I swung them, but I got out of the position because they weren't really doing anything, and they were like trading sideways, and they fell a little bit, so I had to get out before I lost everything. Dollar General, I talked about this in chat. I actually decided to swing this because they were at the bottom of a support level. So let me show you real quick. There's nothing particularly special about them. Their earnings are coming up next week, and IV was low, and nobody really cares about Dollar General. They're not on anybody's radar, and they've been trading sideways since forever. But I do think that they will benefit from a lot of the impulse buying and scare buying that occurred recently due to the situation. Don't want to get demonetized. But yeah, so I bought it down here and it's bouncing. It'll probably, the whole retail sector was down today. I mean, that it was just like, whoa, just got beat down. Target. It was another play I had yesterday. I got the hell out of because I'm glad I did because it got beat the hell down today. They were down like $3 today. It's a little bit up after market. So we'll see what happens tomorrow. It needs to get above VWAP to be super convincing, but I think overall it'll run up to earnings. I don't know how far, but we'll see. It is another earnings play. I'll hold it, and I'm at the same time testing my theory about gains, longer term time scales. You got to be a little bit more patient, but it helps not to succumb to I got to buy something today. What am I going to buy? What am I going to buy? Oh, I got to hurry up and get in. Market's about to close. I ain't had to play all day. That whole scratching and itching type deal, it helps to avoid that when you swing trade, and you buy at comfortable levels too. So this is the type of trade where you can set it and forget it. I don't have to look at my account every 2 seconds to see what it's doing because, I bought options a month away, even though the earnings are next week. So I think they'll go up. I think we'll hit RP. We'll hit P for sure. I don't know exactly how they'll do on earnings. I don't know, what the forward guidance is, but we will see. Um, Target, I had to get out because I was going to get clapped if I didn't. $2 loss. I'm, setting better stop losses now, and I'm controlling my trades better. In the past, this would have been like a $100 or $200 loss, but I'm quick out now. Nah, no more. So, and again, Take Two has been the star of the show for the past couple of days. They have been clutch in the building, in there like swimwear. Like I said, we sold off the majority of our contracts. We only have 5 left, holding them for earnings. And of course, it fell off the cliff after earnings, but we'll see tomorrow. Again, it doesn't matter because this is all house money at this point. So even if this goes to zero, doesn't matter. So those are my plays today. So for the final segment, we have our chat questions corner where we take questions from our Discord server members. So let's do it. All right. So, shameless plug. Remember, it's free 99 to join our Discord server. The link is in the description below. And we are live Monday through Friday, market hours. And let's get to it. So, Moby D asks, VIX below 30 is something I could point out. Well, let's take a look. So, VIX is as I've explained previously, it's the inverse of SPY. And we look at how they correlate to try to figure out where SPY is going. If we look at this chart, this is, of course, let me go back. All right, so we have the 3-month chart here. This is the big dip, of course. And then we got the trading range. Of course, over long periods of time, VIX is never going to do well. It's not designed to do well. It's designed to track the volatility in the market. And when VIX is down, SPY typically does well. So it looks like VIX is on its way to 29. If I didn't know any better, maybe bounce off the 200-day moving average. So this may be telling us that there's sunny skies for SPY ahead, at least short term. We got this is a daily candles. So we'll see. I don't know. Maybe we'll definitely bounce at 29. That's a given. But are we going to get there before we bounce or not? Because we don't appear to be oversold yet on the RSI. So we still have some leg room down, which suggests that SPY has some leg room up. Let's take a look at this on the 5-day chart. So it's been trending down, of course, because that SPY has been going up. So, of course, we would expect to see VIX going down. On the daily chart, though, it is oversold, and we do have this candle, which is looking very bearish for VIX, suggesting a continuation to the downside, which means a continuation to the upside for SPY. Let's take a look at it. All right, so we are about to hit, well, we're trading sideways actually, which is hilarious, but on the hourly chart, but we do have a support level coming up here at about 32.24 and again at 31.01. So, you could look for SPY puts around these levels potentially. Of course, look at SPY's chart and see the correlation. But yeah, and you could look for you could look for SPY puts above this level and SPY calls down here because it's inversed. So the with SPY you would want to look for the calls down here and the puts up here, but with VIX it's opposite. So you would want the puts down here and the calls up here. Or no. Calls down here and puts up here because when it goes down, SPY goes up. Okay, I'm sorry, I got confused for a second. But yeah, you want to look for calls on SPY when VIX breaks this level and puts on SPY when VIX breaks this level. All right, got that clear. So that's all the time we have for today. Remember, plan your trades and trade your plan. Bulls make money, bears make money, but pigs get slaughtered. Don't forget to subscribe and hit the notification bell so you never miss an episode. Follow us on Instagram and join our Discord chat where we're live until 5 and we do something before 2 something. The links are in the description below. Until next time.
Today, it looks as if our heroes bested the market gods, and the market closed above a crucial support level. But will the momentum continue, and who will arise victorious, the bulls or the bears? Find out on the next exciting episode of Trading Bull Z.